Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report on the government's finances. The Treasury has come out with some numbers today on what the government's position was at the end of September, just 4 days before the election. What it shows is that the government's operating position is in deficit to the tune of $757 million. That compares with a forecast of a $943 million surplus. Just to put it in context, you can see here from this chart that over the last couple of years, the size of that surplus has been dropping. Normally, it grows through the year, but we've started off well in deficit this year and we're likely to go further. But of course, this operating deficit includes the results from the New Zealand Superannuation Fund, which was the main culprit here. It lost $1.1 billion in the 3 months to the end of September. In September alone, it fell 8%, its worst month ever. Obviously, it's heavily exposed to international stock and bond markets, and they've had a terrible time lately. I'm sure October was even worse. This, though, is slightly misleading because obviously the New Zealand Superannuation Fund doesn't sell its assets at the end of every month. In fact, we're not supposed to use it for another 20 years. So sometimes we look at what we call the OBEGAL. It's the operating balance excluding gains and losses. This is a bit more of a realistic picture. And what it shows actually is we're doing quite well. That income taxes are actually stronger than forecast, GST is stronger than forecast, and interest on withholding tax on interest payments is also strong. So all of these term deposits that we have and debentures, they're paying quite strongly, partly because we've saved more in the last year or so, and also interest rates are a bit higher than they were, let's say, a year or two ago. But the OBEGAL, as it's called, is actually better than forecast at a $900 million surplus versus a forecast for a $500 million surplus. Again, strong income tax, GST stronger than expected, and that more than offset lower corporate tax. Spending for the government was actually slightly lower than forecast, but that masks a big increase in spending overall. Government personnel spending up 9% in the 3 months to September from a year ago. And that's because not only are government wages rising faster than the rest of the economy, but also employment growth in government is rising fast. In fact, when you look at total core Crown expenses, so this is the stuff that bureaucrats and the core government does, that's up 9.5% in the first 3 months. This is the same 3 months a year ago. That is much, much faster than the economy overall. In fact, that 9.5% growth in spending compares with a 4.5% growth in revenue. Houston, we have a problem. This really does not compute and shows that the government deficit is heading much lower, mainly because of the growth in government spending. And that's before we see a drop-off in revenues from corporate taxes and income taxes as the economy slides further into recession. We have to hope that some new government, or the existing government, if it gets back in, looks to put a brake on that government spending because it really is driving the government's position heavily into deficit as we start off in a recessionary period. I'm Bernard Hickey with a special economic weather report on the government's finances for interest.co.nz.